What's up, everyone? Today is October 27th. Um, so, my opinion, there were three very good high probability scalp setups. I'm gonna cover all three of these setups. The first one of them was on Lucid LCID, and the other two were on Microsoft. So, I've been getting a lot of questions saying, uh, why have you switched to more of a scalping style as opposed to your old breakout style, which worked out pretty nicely in the past. And yes, it did work out, but there are three main reasons why I'm thinking about and back testing to switch. It's not a major switch. It's just very minor tweaks in my old strategy. The concept still remains the same, but the first thing was time commitment because of college. I've already talked about this in multiple videos in the past, but I did move to college, so I only have about an hour to an hour and a half every morning to trade now, as opposed to 4 or 5 hours. The second reason was risk to reward, and this was a very key reason why I switched. So yes, I was able to catch these major breakout plays, 70, 80, 90% return on investment. But for me to catch those big moves, I needed to be patient enough for the trade to work out. So what I mean by that is, I would wait for these 5 minute candle closes below these levels. And at times, when I waited for these 5 minute candle closes, if it was a Thursday, Friday near the morning, my premiums would be down 30 or 40%, but the trade idea or the trading plan was still intact. And this brought up a very big question in my mind. How am I able to allow myself to risk 30 to 40% even though my trading strategy is good? So that was a major red flag in my mind. And then the final thing is, going through my journal, I found myself trying to control every small variable. Sometimes if there was a good trade, I would say it didn't work out because of volume. And then I would go and I repeat the same mistake because, volume was never the issue. There were very minor things which I would try to link the trade to on why it didn't work out, when in reality the trade just didn't work out because the market is composed of infinite variables and it's physically impossible to control or predict everything. So now me accepting that fact, how am I going to let myself risk a potential 30 to 40% on a trade, knowing that some plays just don't work out? I have to keep my risk very tight, even if that means sacrificing some of these 70, 80% return on investments. And you still can catch some of these big moves if there's a lot of volatility. But one thing with scalping is you can always ensure that the risk to reward will be very good. At times you're only risking 3 to 5 cents for a potential like 30, 40 cents. And two, you can never take a big red day as long as you follow your trading or scalping plan and you never trade emotionally. So that's kind of like a quick backstory, I'd say, on why I explored scalping as an option, and it's been working out pretty well. Um, so I will be making more recap videos on them, but let's get right into it. Just with my previous strategy, the first thing I'm doing is I'm finding these major levels. And the level which stands out in my mind was this 28.19 level. 3 to 4 major touches on a daily time frame indicates that if we get above this level, we should see a nice reaction. So that was the first thing. I didn't really have any zones charted up. The main reason for that is I talked about this a little bit in my last video, but I'll go ahead and I'll cover it again. Zones are areas where sellers are placed. They're price imbalances. However, when you're scalping momentum, when you're in and out very quickly, it doesn't really matter if there is supply or demand. And the only reason for that is because on a 1 minute, if we break a level, if we break high of day, if we break pre-market high, there's going to be a reaction no matter what. So there being a zone doesn't really do too much on a 1 minute time frame. If I was trend trading and I was trying to ride a breakout to a certain level, then definitely I agree that you need supply zones. They give you good ideas of a risk to reward on a higher time frame. But just for scalping and momentum purposes, uh, supply zones it didn't really make sense for me to chart supply zones. I was only going for the quick momentum. So that was a higher time frame on LCID. Now we break it down. I did have pre-market high at 28. 28 is also a psychological level. So my plan was literally just to take a break of pre-market high from running the resistance level at 28.2-ish and then just riding this up. So, LCID pulled back very, very slightly and then immediately got bought up. As soon as we broke through 28, I took it, caught this nice move, and then my final scale out, just to illustrate, enter as soon as we broke 28, and then we had this nice push up, we started pulling back, took it off right here. So I didn't take out my entire position just because this was a major breakout play, and as I said, on major breakout plays, I want to let a couple contracts run. However, this instantly pulled back, and then as soon as we breached this level again, I pretty much got out of the last two for breaking. So let me now. So this was my play on it. Straight green here. The first like 80-90% scale outs netted me 30 to 40 cents. So just think about that. If you're going in with heavier size scalping, 20 to 30 cents can provide very, very nice returns. And on the downside, if this broke through pre-market high and then instantly failed, I would be out for break even. I would be out for like a 2 to 3 cent loss instead of waiting for a 5-minute candle close. And if this then decided to set up again, then I can always reevaluate and enter. This way, I ensure that I never take any big losses. I ensure that my risk to reward makes sense. Made like 30 cents on this play, only risking break even or a couple of cents. So this was a very, very good play in my opinion. Worked out perfectly. Somebody in the Discord mentioned LCID, so whoever that was, thank you. Caught a nice move of it. The second trade was on Microsoft. So Microsoft gapped up on good earnings, right? So let me go to a daily time frame. So Microsoft gapped up on good earnings. So what does that mean? That means that there are buyers interested in the market because Microsoft gapped up like $4 or $5. So we also had a news catalyst supporting it. But besides that, I couldn't find any major levels on a higher time frame. This was just a gap up. So in my mind, I'm thinking, okay, this isn't an LCID play. This isn't like a major breakout play like this. What this is on Microsoft is just a quick momentum pop to the upside. So I went down to a smaller time frame. I found a couple of levels. The only level which stuck in my head was pre-market high, right? So my plan is to take quick flag patterns or quick periods of consolidation before pre-market high. So my first play was a very, very good play. We had this flag pattern. As soon as we broke this flag at 9:40, I entered. And then we had this nice momentum pop up at 9:41. This 1 minute candle may not look like up. This 1 minute candle may not look like much, but in reality, this was a 30 to 40 cent spike. I think contracts went from 156, I think, to 191 or something like that. So that's a quick 30 to 40 cent pop. So as soon as we popped above high of day, I was expecting pre-market high to break. Instantly pulled back. So I got it right here for a 30 to 35 cent gain. So you need to think about that. If this didn't go right away, if this went back inside of this trend line, I would have been risking a maximum of 5 cents. But on the upside, I just made 35 cents. So this is what I mean by keeping my risk super, super tight, but my risk to reward making a lot of sense. And then finally, we retested the trend line. We broke above the high of day again. I entered slightly before, just in case high of day failed. I wanted to make sure that if we did fail high of day, then I wouldn't be stuck in a major loss. So I entered slightly before high of day, popped above. This did pull back to my entry point, but since we did break pre-market high, I wanted to give it a second, pushed up, and then as soon as this started showing weakness, I exited on this candle for another 30, I think it was 40 cent gain right here. So after this, there were a couple of more opportunities. For example, if you took this high of day break, you would have been stopped out for like a 2 cent loss. If you took this flag break, you would have stopped out for break even. So in my opinion, these scratch trades, small winners, break even, small losers, are perfectly acceptable as long as you can catch a couple of these bigger moves, like these 40, 50 cent gains. Then losing 1 to 2 cents or anywhere from break even to 5 cents really has no damage on your account. So now, what are some of the downsides with this strategy? I definitely want to go over that because no trading strategy is perfect. The first thing, in my opinion, would be over trading. You're scalping, you're in and out very quickly. There's a lot of re-entering. So, in my opinion, the best way to combat that is if you take a couple of quick wins off the open, then just call it. So Microsoft had two good opportunities. LCID had one good opportunity. These three trades probably made my entire week. So in my opinion, it's good to just call it. There could be other setups, but you already made your money for the day. You already made a good amount of money for the day. Just call it, and there's always tomorrow to trade. The other thing is, it is very retail minded. A lot of people would argue that like you need like a very very specific edge to be profitable in the market. But what is being consistently profitable? Consistently profitable is making money over a period of time. And in my opinion, the best way to do that is by mitigating your risk, trading logically, and trying to keep yourself break even, small red, small green on those mediocre days, right? So yesterday, trading with a friend on a small account, we made $10, right? So I know that is not a lot of money, especially on like a $500 to $700 account. But then on days like this, we're able to help him capitalize like 100, $200. So as long as we can catch bigger moves for a couple of days on the month and keep our risk super tight on mediocre days, then we will definitely be consistently profitable over the long run. And I'm not saying the strategy is a perfect strategy. It's just what fixed my needs for the three reasons I listed in the beginning. A lot of strategies can make you money. You just have to find your own and stick to it. So I'm gonna end the video here. I hope you guys took something out of this video. And for those asking me again why I switched, again, it's just because of that risk, time commitment, and there being too many variables for me to control. And a lot of people are bashing me saying, well, why would you switch? Like strategies in general. This isn't really me switching strategies. This is just a little bit of an add-on or a minor tweak to my previous breakout strategy. But I'm going to end the video here. I hope you guys had a good trading day. I know Google provided a nice opportunity for a longer term breakout. Wasn't able to capitalize on that, but I am looking to get a second day continuation move tomorrow through 2890 or through 2900.